Good morning, one and all. Good afternoon, even. This is Ray from Next Forex Trade. Today is Friday, the 10th. Sorry, Friday the 11th. Don't know what day it is. Friday 11th of October 2019. Time has just gone 12:20 here in the UK. So let's have a look over the market. So if you looked at previous videos, you'll see that I was in two positions and over two currencies, and those have all come in as losses. Losses do happen in the market, and I'll be talking about those a bit later today, but this is part and parcel of trading. It's one of the advantages of keeping your risk appropriate in the trades, to make sure that when you do have losses, that they don't have a major impact on your ability to trade. You can always live to trade another day. Which is the case in this instance. So let's crack on. It being a Friday, I'm not looking to open any new positions, but I'm still going to have a look over the market just to see what next week has, or what the market's showing today in terms of opportunity. But let's start off firstly. Okay, let's go over the strategy. Basic strategy is a trend-based strategy, so we're looking for the price to be trending either up or down. So we've got an example of a downtrend here. So we need lower lows, lower highs. I have a standard deviation around the price, which you can see here, going from high to low, this purple thing channel around it here. And in a downtrend, we're looking for the price to be overbought. So I deem overbought when it's in this upper edge of our standard deviation channel. So interacting ideally with the upper edge of this is a good sign, because the price is showing that it could come back and reverse and move lower to an area of oversold, which is down in this area here. Ideal stop loss placement is above a lower high. So this is a lower high, this is a lower high, this is a lower high. So stop loss is above there. Give the best placement in terms of trades, because the price has pulled back, allowing for a better stop loss placement. Means you can have a bigger position size in, and there's greater scope for profit. But no much further ado, let's crack on. Let's just have a look at what we've got in the market today. Just bear me one moment. Okay, cool. So AUDCAD. As I said, downtrend, lower lows, lower highs. Price is currently in an overbought area, and it's coming up to our standard deviation. You can see it's pushing here. It's encountering some resistance as well from these previous highs around here. It's kind of zonal, but if we look at the lower times, you'll see that there's more contact points on that resistance. So there's good reason to believe the price could have trouble moving much higher than that level. And having a stop loss above that would make sense. But the problem that is here at the moment is, as well as the trend being in place on the daily chart, we also want to have some correlation, time frame correlation on the lower time frames. So what this means is that these lower time frames, so I've got the 4 hourly, 15, 5 here, these are saying a similar thing to what the daily is saying. This gives us a higher probability trade, and at the moment for me there isn't enough bearishness in these lower time frames. They're all kind of retracing at the moment, hitting this resistance. Sorry, excuse me, got a bit of a cough this morning. Hitting this resistance, but really what we want to see is the price move away and start creating lower lows and lower highs. This is, in terms of a technical setup, this is looking okay, because this is like a what's called a double top. Price is coming up, it's interacting with the previous resistance. It hasn't formed yet, this candle, but it looks like it could be forming a double top, which is a potential reversal, so the price could fall away from this level. But really the more conservative trade is just waiting for that to happen, not preempt it, not be not trade on conjecture. Wait for the confirmation. So wait for these to close, wait for the price to move away, start to show its cards, and give you that bearishness that you need. So no for today, but possibly into next week. So this is the AUDCHF. So let's just keep this here. Let's tidy these up a bit. So yeah, again, signs of bearishness here. Lower lows, lower highs, fits neatly with our standard deviation. You can see it's starting to interact with the upper edge of our standard deviation, which is a good sign. The price could move away. and move lower, but we haven't seen any signs of reversal yet in terms of a reversal candle off of on the daily. These lower time frames have broken structure as well. You can see that whereas before we had these lower lows, lower highs here, what started to happen is the price has started to make a new higher high. So it's moved past this previous level here and started to move higher to produce higher highs and potentially higher lows as well, giving more context to the price in the standard deviation moving from low to high like this, or even maybe taking this move here. It's going to be more apparent on the daily, on the hourly here, which isn't really the story that we need. We want it to again be congruent, being time frame correlation with our daily time frame. So we want to see these on these lower time frames moving with lower lows and lower highs. It's not doing that at the moment. It's hitting resistance. Even looking on this here, look, this here as well. So the price could have trouble moving much higher than this. We can see this previous support here, and the price is just moving into this at the moment. So waiting for this to start producing those lower lows, lower highs would be the more prudent trade. AUDJPY, again, a lot of these breaking structure on the lower time frame. So immediately what popped out here on the AUDJPY is that break of structure again. So rather than these lower lows, lower highs, you can see it's broken out our standard deviation, starting to make higher highs and potentially higher lows as well. So it still makes sense. This is why it's important to kind of take the different time frames into context, because in terms of the daily, that's not really, it's still bearish. It's still producing these lower highs and lower lows. This was the previous lower high here. This is still lower than that. It hasn't given a reversal candle yet. But if we were looking in isolation just at the 4 hourly or even the hourly, then perhaps you wouldn't be aware of the bigger picture, if you like. And each time frame is just one with another. It's not kind of an island on its own. What you can look at an island on its own, but I mean, having just awareness of what all the time frames are doing just makes you more can make you less anxious in the trades in terms of what's going on. It can help you to stay in trades for longer in terms of just waiting for potential reversals to come because of what the high time frame is saying. And in the same way, it can help you get out quicker because of the price potentially adversely moving against you. But overall on this, still bearish, but it's going to take a while for that bearishness to appear back in these lower time frames, because these are breaking structure a lot here. You can see 4 hourly, these are quite bullish at the moment. So wait until that starts to show better signs of bearishness. So maybe next week, see a reversal candle off of these types of level, off of this resistance, previous support, would be a good sign to potentially get short on this, but pass on that. AUDUSD, so this is the trade that I was in, got stopped out on 2% on this one, in fact. So let me see if I can add in my positions, see if this will work. You can't really see it on the screen, I doubt, but my entry see if I can just about pull this off here. So my entry was here. I was going initially for profit targets for just below to these lows here. I got stopped out at this level here, and you can see the price has moved much higher than that now. So it's a case of the trade making set. If I'd seen that setup, I'd 9 times out of 10 I would take it again and again and again. So there was no reason not to trade that. It's just that things went against me in this instance. You can see again 4 hourly here, break of price structure. It's broken resistance. Come on, this was quite a key level here. Come on. Okay, so initially there was this nice low lows, lower highs, which was the premise on what I got in on. But when this previous lower high here got broken, or in fact it was tested, so this was the lower high, the price came up, tested it, double topped, pulled away, done its double top here, and it's broken through that resistance. So this, whatever way you want to look at it, this was a key level, right? Whether the price kind of bounced off of it or broke through it, it was a key level, And we saw that before it even reached that, because we saw in the price here, it had just tested it so many times. And when it's tested it that many times, it's either going to pull away and move lower, which means it's a good reference point for our stop loss above that level if we're looking to short this. But you know, when it's tested it that many times, it can also break through, which is why we've seen, if you look in the last few candles, these have all been consecutively higher, because this was such a key level. It's bust through it and it's just followed through with that momentum, because this was just such an important level for the price. So this has continued to move higher. There are no viable shorts or longs on this, even for me at the moment. It's really just waiting for just more context to come back into the daily for me before attempting to do anything with this. So it's wait and see, sit on hands on this one for the moment. Like I said, 1% in this is my loss that I took on this. So it was 2%. I did have 2 possessions. I scaled into this, but you know, that's by the by, because the potential upside on this was way bigger than the downside on this. I was going for potential of these lows here, which would have been about 3 to 1. Yeah, if you added them up, it would have been about 3 to 1 in terms of the reward to risk. So, you know, understanding probability, taking enough of these types of trades that at least have a reasonably good chance of coming through, means in the long run, I'm going to end up ahead on these. But this is just one of those instances where, you know, the market did what it did, and I was taking out. Just adding to that point as well, I think that's one of the reasons why it's probably best not to think of Forex as like I think some people try to think of it as like a salaried job where you get paid a certain amount every month. You can take out this amount of money every month. It's really not like that, because there's going to be, you know, it might be 5 or 6 consecutive losses in a row, and if you're looking for you know, that income to take out as a draw every single month, there, you know, you're going to have bumper months, you're going to have not so great months. So specifically for me as well, it's really about just letting that capital grow, because if you're taking money out as well, you're not giving the capital a chance to grow and then potentially use compounding. So I mean, I haven't really talked about this as of yet, but as this account grows, it means my 1% that I'm risking as I reach certain thresholds increases. So at £10,000, that 1% is £100. As this grows to you know, over the 1,100 threshold, then that 1% becomes £110 that I'm looking for. So on and so on and so on. As it hits 1,500, that's £150. So by not taking a draw, by allowing the capital to grow, it means over the long run, it's one of the ways that you can compound your account and see it grow over time. But if you're taking you know, money out from that every single week, or you know, thinking that it's like a salary that you can just take out money every single week, every single month, it's a bad way to think about things. I mean, it's just my opinion on it. People may have other opinions on that, but having done this for a while, that's one of the lessons I've learned. It's bad to kind of think of the Forex or trading in that way. Really, the bigger gains come from just letting your money grow and not cutting it short, and you know, not allowing it to grow. So let's have a look. Sorry, a bit of a rant there, but let's just carry on here. So we got CAD CHF, no real opportunities that I see on this. This is still very rangy, so I'll pass on that. Here, CAD JPY, could be some good stuff looking into next week. We can see nicely falling within our standard deviation. It's coming up to hit this resistance here of previous highs, which was previous support, previous kind of highs here, zonal. So this is good. Today's candle is interacting with our standard deviation. It's coming into contact with that resistance. It's the wrong type of candle that we need, though. We need to see a type of a toppy type candle that is reversing off of this level here, and then to see that bearishness return in these lower time frames. But yeah, if we do see that, then it would mean a stop loss above here, and then the scope for, you know, potential profit is basically these lows here. Right, so you know, when it comes into this oversold area on the daily. So this should we see reversal candles going into next week and some bearishness appear in these lower time frames, yeah, that's going to be a nice reward to risk. But you know, can't put your hopes on that yet until till the market produces it. So wait and see for that. So we got CHF JPY bearish overall. Yeah, this is still, it needs to, it's in a good position at the moment. It's pulling back, looking to potentially create a new lower high, but we need to see a reversal candle off of some sort of resistance as well before attempting to short this. And obviously the bearishness in these lower time frames, much the same as that last one I just talked about, but this isn't ready quite yet. But yeah, overall very bearish on that. Good scope. So this here, Euro AUD, bullish overall. I've mentioned this a few times in terms of how this setup could go. You could look for, it's a bit too far gone for me now, in terms it's a bit too mature in this move. But if you look at earlier videos, I had suggested earlier, you know, you could get in with a stop loss underneath this higher low here, which is the same as this one here, or for a bigger move with it underneath this higher low in terms of the daily, this one here. Either would have worked. This one was a bit more aggressive but would have paid off, or would still be paying off. The wider one here was slightly more conservative because it was outside of the daily trend, outside of the daily. It made sense on the daily because it was lower than a higher low on the daily, but also on these lower time frames as well. So there's more, it's less risk, if you like. One way you can think of it, because it makes sense on multiple time frames, but it would mean that you're going for a much wider take profit above these highs here. Yeah, I wouldn't be personally looking for positions on this at the moment. It's just a bit too mature. It's too far gone from its previous lows to make this viable and to make a decent return out of this. So I'd pass on that for now. So next one. So next one here is we're looking at the EURCHF downtrend. It is encountering resistance here. So these previous highs here we're seeing, previous lows, so it's probably going to have, well, it did have problems getting through that level yesterday. Looks like it could be approaching that again. But on the daily, I just want to see a bit more value. You can see how in previous moves here it's kind of hugging the upper edge of our standard deviation. At the moment it's around the average of it, so the middle line there. So I'd want to see it break through that resistance, move higher to interact with our upper standard deviation channel, and then also to see that bearishness appear in these lower time frames as well. So yeah, just have to wait till next week for that one. Oh, look at this. So this was the other one I was in, Euro CHF. So this is one I got stopped out on. So my entry was here. My stop loss was here. Entry here, stop loss here, take profit was around here. And if you look at the previous videos, it marginally missed it by, you know, maybe a few pips. You know, not mad at that, because it's just the market doing what it does. It's like, you know, it does what it does. It's like if you're, I don't know, if you're sailing a ship, you're a sailor, and you get mad at the sea for, you know, for captizing your ship or your boat. I'm not a sailor, by the way, so I don't know any. Forgive the lack of nautical knowledge, but basically you can't be mad at the sea for doing what it does. It's just nature. It just does what it does. The only thing you can do is prepare for it and you know, just look to navigate it as best you can. And don't rely on luck at all. Just rely on what you're seeing in the market. So I marginally went into to missing my take profit. It pulled away. There would have, you know, I had opportunities to take that out if I wanted to, but I didn't. because the trade still made sense. Now it's not making as much sense because I've been taken out, but I've been taken out at a sensible place, right? And that's one of the good things. Just have a reason to be taken out. The level that I got out was a lower high. I was deeming this as a lower high. So when the price stopped making lower highs, then I know I'm wrong on that. And it's a good time to be out of the market when technically something has changed in the market to prove that I'm wrong. Whereas taking it out earlier in that, there was no technical reason to be out. The price was still doing what I was anticipating in terms of it, moving lower. So even though that's a loss, I'm still happy with the way that I've traded at. And if you can come away from a trade and say, I've done everything I could in that trade and I'm happy with the way I've traded at, be it a win or a loss, then you've traded well. In the long run, if you continue to trade well and manage your risk and your money properly, then you will make a return in the long run. But that's by the by. Sorry, going off on a bit of a rant there again. But basically, this at the moment, this just needs to find a bit more clarity in the price action. It's still teetering around this resistance. It's broken out of our standard deviation channel. Looks like there could be more context to the price potentially moving up like this in a retrace. So I'd be leaving that for now, just waiting for a bit more clarity to come back to the markets before trading that. So so next one. Ooh, wow, look at this. So this is the Euro GBP. Finally a bit more readability coming into this with this kind of extended move here. It's not tradable yet, but basically this makes it a bit more readable for me. So basically it's broken this previous support, this previous low here, which was also, you can see previous highs, kind of zonal, these lows here. It would show more on these lower time frames, but just we'll stick to the daily on this for now. But basically it's broken through that previous support. It's coming down, going into a potential oversold area. So what we're looking for is this to potentially reach these types of levels and then pull back. Now, given these are daily candles, that may take a few days, but when we're looking for the pullback, we need it to come back, interact with the upper edge of our standard deviation, see a nice small type of candle, and obviously that bearishness to be also apparent in our lower time frames as well, making that short viable. But I wouldn't want to be shorting this now. This would be like catching a falling knife, because it's too far gone, too late in the extension. There's no sensible pace for a stop loss. It would need to be above here. So shorting from this point here with stop loss above there on a 1-to-1 reward to risk ratio would mean that you need your take profit to be all the way down here. So you'd be selling into that potential support. So it needs to find some value to make it less expensive in terms of a trade. But be an interesting one in the coming days to weeks to see how that materializes. Euro JPY, similar thing, still bearish on this. It's good that it's finding some value here in terms of coming back to its standard deviation here. So you can see how these kinds of things are kind of interacting with each other. We need this candle to close first of all, but it looks like it's having trouble finding, moving past the high of this level here. And if it does, that will be a good sign, because not only is it a previous high here in terms of here resistance, here support, probably goes back as well, these kinds of levels. So it's a tricky level, but it also coincides with our standard deviation as well. So this is telling us that this could be an overbought area. So we're looking for signs of reversal again in the coming days. So need this to close, ideally something like this. Into next week, some toppy type candles that just kind of like barely pierce that resistance there, and then look for that support. So look for that bearishness to appear on these lower time frames as well. But at the moment, there's nothing really can read on this. This is broken price structure in terms of trendability. There's no higher highs or higher lows at the moment. It's just coming around. Looks like it's going to do a double top, hit resistance, possibly, and then move away. But this needs to be cycling down again with lower lows, lower highs, allowing us to do a standard deviation from high to low on these lower time frames. So pass on that for today. Okay. And again, if you're finding these useful, don't forget to give it a thumbs up. If you've got any questions, just ask away. I'm happy to answer whilst I'm online or in the comments section afterwards as well. So this one here is Euro NZD. It's been very sideways for the last few days, but still in terms of this move here, this is still bullish overall. It just needs to pull back, break this previous support that we've seen in these lows in recent weeks. Break this support, come down, find some support off of this type of level, allowing us to potentially get long on that, but not for today. Euro USD, much the same as the other ones that I've said that look similar to this. It's coming up, hitting its standard deviation, finding resistance. So today, I wouldn't envisage this making much more movement past these highs. So we've got it at our standard deviation. It's interacting with that. It's also horizontal resistance, previous support. It's probably going to have trouble moving much higher than this. So again, going into next week, we're looking for toppy type candles that just barely pierce this resistance going forwards, and then bearishness to continue in these lower time frames. But yeah, we're still kind of preempting that a little bit though, because this candle hasn't closed as yet, and it's only, you know, midday still. So we need this to close to just to be assured that that is going to be a resistance, a good resistance level. But yeah, keep an eye on that into next week. Oh, GBP AUD, again, it's kind of it's extreme, isn't it? So with the standard deviation, it looks like it could have trouble moving much higher than that. There's no real resistance levels I can see in the previous price action. But yeah, wouldn't be long on this, no way. It's just, you know, it's too late to even attempt being long on this. It needs to come back, find some value, and a nice reversal candle with bullishness appearing in our lower time frames as well, before this is tradable. It's just too overbought at the moment. Don't want to overpay for stuff. It's like, yeah, it's like, if you think of it like shopping, you know, it's like you don't want to get too emotional. If you think of it like an auction where people kind of bid up the price, going back to this one, this is an example. If you were trying to buy into that now, the price is just already too high, you know. Or I don't know, think of it in shopping terms. You wouldn't pay, I don't know, if you're buying something, I don't know, just a chocolate bar, you wouldn't buy, you know, you wouldn't spend £50 for a chocolate bar. You know, £1 is okay. 10p is a bargain. You know, whatever you're thinking of buying, but just think in terms of value for money. Look for value for money, and don't overpay for stuff, because at the moment, in my opinion, that's overbought. Same with this one here. This is the GBP-CAD, also very overbought at the moment. Needs to pull back, find some value across the board before potentially selling that. It's in fact gone almost, no, I wouldn't call that this. It's not quite parabolic, but I mean, it's quite an extensive move that it's made, just out of character of the previous price action. So pass on that. Same here, overextended, needs to pull back, find some value. So pass on that one as well. Same here. Would want to see this pull back, find some value. It's much the same story, because many of these currency pairs are correlated, so they're going to move in very similar ways. And of course, this one here, same. I mean, yeah, just don't want to repeat myself too much. You can see this extended move. It just needs to pull back, find some value. I'd want to see this, in fact, go even more overbought before pulling back to give more credence to that being a higher. So what I'm looking for here is, this is basically the previous higher high in this context. Yeah, so high, that's a high, that's a higher high, that's a higher high. So what I'd want it to do is ideally make a new higher high and then pull back to produce a new higher low. So the new low would be somewhere around here after it creating a high high and moving back to find support off of our standard deviation. So that could take a while to do, but that would just be a more sure trade rather than it coming around doing a kind of double top type move and finding resistance and pulling away. That could then mean that it's actually going to break previous higher lows to move lower. So the more the kind of price structure I'm looking for is it to move up higher, break that previous high and pull back, creating a new higher low. Okay, so next one. Yeah, this is just, yeah, this is giving more credibility to this move here now as well, whereas before I would have been, you know, bearish in terms of this move. And I think I would have said in previous videos, it was like, okay, I'm not sure whether to go, although there's a clear bearish intent, there's this move here which made it look like it was in limbo, right? Because there was no clarity as to whether this bullish move could continue and break the previous highs, which it has done, or still continue lower like this and find resistance off of this type of level as it did in yesterday's candle. So yesterday's candle did find resistance off of the standard deviation, but it didn't continue to move lower. So what I would have needed to see is a reversal candle in today's candle, and then in preceding days the price to move lower. It hasn't done that. So that's one of the safety features. If you look back at the previous videos, like, I don't want to go long on this, don't want to go short on this, because of this retrace that we're seeing, there could be context to this move, and it looks like it is potentially going to be you know, at least in the short term, at least a bit more bullish. So yeah, look back at the old videos just to see that from this week. This is looking okay. NZDCAD, so we can see standard deviation, lower lows, lower highs, resistance here from previous highs that we're seeing, previous lows, where's support, well not lows but support that the price had found. So it gives context to a stop loss above that level. So really, you know, it hasn't made any kind of drastic moves higher like we saw in the other ones where it's broken that price structure. This price structure still has context in lower lows, lower highs. So what it's missing is basically the lower time frames to be creating new lower lows and lower highs. But this still has some validity if we start seeing it break support, allowing for a standard deviation from high to low in these lower time frames. But that'll be interesting for next week. Of all the ones so far, I think this has the most scope going forward of having something at least into next week, of having a decent trade set up. This one again, yeah, I can't really read this at the moment. That's why zooming out can also help, because it gives you a bit more context. You might just be looking at something in isolation. Okay. I see context in this move here, but it's not tradable yet. It just, I want to see it either find some resistance off of these levels or for our standard deviation before potentially looking for shorts on this. But I'm bearish on this overall, but just want to see a bit more clarity in the price action in terms of it finding resistance at certain levels. NZDUSD, much like the CAD, NZDCAD, so NZDUSD finding resistance here, previous levels, standard deviation, resistance from previous highs. That's good, giving us context for a stop above that, but much the same. Basically, you want to see some clearer signs of bearishness on our lower time frames here. This is still very boxy in terms of the price. I want it to fall away, make lower lows, lower highs. But yeah, this again could be one to keep an eye on next week. No, don't like that. Very choppy. Too far gone. Bullish on this. This is you know, nice price action, but this candle wasn't ideal to enter on. It was just a bit too long. Need a kind of smaller type of candle off of support here, but the price action is still readable. I just wouldn't want to trade this. I do want to see a bit more value. I mean, if you were to trade this, I mean, you could use the hourly. So look for the price to come back and find support off of this level here, and basically move past the high of a reversal candle, and then the stop loss would be basically underneath these lows here, which is the same as these lows on the daily. So that's outside of our standard deviation. That's good enough. On a 1-to-1 reward to risk, would it stack 60 or so? Yeah, it would be before these highs. Not my preference, taking it into the weekend as well. It's not great. Oh, hang on, what's going on there? Sorry. Oh God, where's it gone? Yeah, it was this one. So yeah, going into the weekend, just want to be wary that the market could gap. So that's an additional risk that you'd be taking. I can't see what the swaps are on this at the moment, but basically, yeah, just be aware that the market could gap, and the potential swap cost as well, taking this into several days. But the stop loss below these levels would make sense. 1-to-1 would take your profits before that level, after obviously seeing that pullback here and reversals. But yes, it's a bit risky. 0.5%. My risk profile is 0.5% to 3%. So where the ones that I'm a bit more sure of, I'd be 1% from the get-go. This one would be 0.5% if that criteria were to happen. But again, I wouldn't be trading that based on those reasons I've already mentioned, the weekend and the additional risk. This here is a USDJPY. It looks like it's coming into this resistance again. Kind of come around. It's done a double top already. It's coming around again. Finding some resistance there. So I'm still bearish on this, but it's a case of seeing clearer signs of that bearishness appear on these lower time frames, because at the moment you can see how this has kind of done a almost like, I mean, on some of these it's like a cup and handle reversal pattern. So that indicates the price could move lower. Still waiting for these to close to make that apparent, but it's just look, this here has context in terms of bullishness if it breaks that resistance, right, and moves higher. But I wouldn't want to be on that at that point, because you're buying into that resistance. It would need to come off. You want to buy off support. If the time to buy into this would be when it's at these levels, at the low of this standard deviation. But in the same time, there's still too much momentum, if you like, from the bearish moves down here, even though it's just piercing through the standard deviation. If we look at it from the high to low, it's only piercing through it just. There's still enough context for this to be bearish. So it's just limbo at the moment. So I wouldn't want to be either long or short on this just yet. So I would pass on that. And that's it. That's the entire market for today. So hopefully that's been of use for you. Again, give it a thumbs up if you like the video. Follow if you're not already. And I will see you again on Monday for Monday session, just to see what opportunities there are then. Okay, take care. Have a great weekend. Bye.